Okay, welcome back to the program. Let's get the conversation started, or let's continue the conversation. Join our conversation circuit. You know where to find me on the social media. That's at Boson Business. Thank you, everyone, for sending your comments through, sometimes about the state of Nigeria's currency. And I got some of them on Twitter right now talking about what we put here on the channel. Now, let me clarify that for a few seconds, that the currency rate that you see on our news and generally on our programming depends on where the sources are coming from. Officially, of course, we all know that the rate is slightly lower than the street rate. So sometimes if you see different figures, that was an inconsistency. But if you look at the official market, about 199, 198, 199, then you find out the street level, you're talking about 230 naira per dollar. So thank you for sending your comments in via to us here on Twitter about what you see on the channel regarding the state of the Nigeria's currency. Harriet is off the desk today, but you can follow her as usual at Harriet Agbe. You follow the bigger channel, and that's Channels TV. Thank you very much, everyone. Keep the conversation going. Let's talk about the state of the market in the first half of 2015. Chukuma Anyanwu is the head of research and strategy at GTI Securities here in Lagos and is joining us live in the studio to talk more about this. Thank you very much for coming. We appreciate your time. Give us a broad overview. Yes, the numbers are out there. Investors have lost money, so if you're telling them that they lost money, they already know that. They can feel that in their portfolios. From where you see it in terms of research and strategy at GTI Securities, what do you see?
Okay, an overview of what happened in the first half of the year was largely characterized by the fact that we had elections earlier in the year. And we also had all of the drama around where the elections were going and political risk heightened. And the fact that oil prices also went down were major catalysts for how the market played out in the first half of 2015. And that's largely, if you consider the fact that Nigeria is largely majorly dependent on crude oil for its primary source of foreign exchange earnings, and the fact that there was almost a 50% slide in crude oil prices, that puts paid to expectations for where the currency market will be trading, considering the fact that we have the market, the exchange rate is not on a free float from the Nigerian perspective. So our capacity to defend the naira was largely impaired by the fact that crude oil prices were down. So from the currency market translated to the equities market, a lot of foreign portfolio managers, became very afraid of exchange rate risk. And even as we speak, Boson, like you pointed out earlier, the fact that we have a major disparity between interbank rates and the street rates actually puts a lot of emphasis on the fact that people are now worried. It's a topical discussion almost everywhere you go to. Is there going to be a further devaluation of the naira? Is it necessary? What strategies has the CBN put in place to ensure that there's eventually a close in the gap? Because foreign investors are not necessarily coming back into this market, largely because you don't want to come back into the market at official rates, and at some point naira slides to where it is trading at about 230 in the streets or on the streets, and you lose money real time, despite the fact that you're making some money, marginal money, from the Nigerian exchange. So if
you don't fix the naira and fix the economy, the stock market will continue to bleed. Absolutely. About $100 million yesterday, 203 billion naira in one day, just one day. That's significant.
It's even worsened by the fact that most of these foreign investors are now taking a wait-and-see approach. They just sit back and allow us fix where naira should be trading. Whether or not we are going to do a further devaluation, the CBN is there to come up with a clear strategy. And also importantly, the fact that we haven't had any major policy direction, even though most people would think to align with the fact that Buhari and the APC government is up on a lot on infrastructure development, and for a savvy investor, you want to begin to price that in, considering the fact that, first of all, he's going to tackle corruption, which is a key problem for the Nigerian system, as well as the fact that there are roads to be built, for power to be fixed, all of those infrastructure comes in. So a lot of private equity firms are just hanging around the fringes. I've spoken to quite a few of them. And you will know that the sentiment is that we are optimistic, but we need to have that on paper. Let's have the direction.
I know that your firm, GTI Securities, deal in both local and foreign investors, whether private equity folks, whether they're venture capital investors, angel investors, and those who are traditional in the market already, from retail to institutional end. Now put together, yes, they want to have some clarity, they want it on paper. What do they want on paper, and from who?
Well, for starters, we can start by having the Federal Executive Council inaugurated. I mean, the ministerial list, out there, so that people can begin to price the integrity of those people running. Whether we are going to have same round hole in square pegs in round holes, or we are going to have square pegs in square holes this time, so that the right people are in the right places. You are sure that policies will then, the system will be run by technocrats largely. Then policies will be well thought out, and the roadmap will be clear, and there will be lesser risk for policy reversals going forward. So if that is sorted out, then you have a lot of private equity investors who are ready, to take the plunge into the Nigerian investment case. Because if you ask me, Bosin, there are only a few places where you have such huge potentials as you have in Nigeria, from emerging markets perspective. And the fact that all it just requires, all we just require as we speak now is to have the right triggers and just a few things done rightly, and here we go.
To a large extent, the first half of the year has been, quote unquote, damaged already. So we're left with 6 months in the year, but we'll get to that a little bit. Let's talk about the bond market or the fixed income.